Good evening, guys, and welcome to this live stream. Tech, analysis, live analysis for the markets brought to you by Oxshare. I'm your host, Jimmy Jagbour, Senior Technical Analyst and Financial Advisor at Oxshare. Welcome to this live stream. First of all, let me just start by scanning the economic calendar first, see what news we have, what big data we're coming up this week. This is the Oxshare website. We go on our economic calendar. We're gonna check out the news for this upcoming week, the most important news. I think we have something related to the AUD, to the Australian dollar. As you see here, we have the services PMI for the euro. This is important. We have the interest rate decision by the Central Bank of Australia. This is on Tuesday, tomorrow at 5:30 Beirut time. And I think we have something related to Jerome Powell on Wednesday. We have the trade balance, exports and imports in US. We have the Fed, Waller speaks. Not very important, but we can see some volatility during this time. Then we have Jerome Powell, I think, the next day. Okay, great. These are the news. We have Jerome Powell speaks, as I said, on Wednesday, and this is it. Okay, let's jump to the analysis, to the charts. First of all, let's take a look. Let's take a look at the VIX. This is the volatility index of the market. As you can see, we've seen a drawdown in this index, shown here. This pull shows that the markets are getting ready to consolidate a bit after a big week upward. Plus, we are coming up to the last month of the year. December is known for consolidation and not having big movement in the market. So this is only logical. The VIX going down, the investors pulling out their money before the end of the year, a bit of consolidation, a bit of redistribution of wealth in the markets. So you should be careful. As you know, traders like volatility. Volatility is our friend. This is how we make money. So when the markets get stable, get stagnant, we need to take a step back, observe, and then jump at the right moment. First of all, we will check some forex pairs. Check the Euro USD. Okay, this is the Euro. We had a channel here. If you see it, I'll draw it right now. We have this channel that has been broken. Okay. We have this channel that been broken. We pushed to the upside. We had a retest. We had a retest over here, and then pushed right through. We had a break of structure right here. This high got broken, taken out. Of course, everything is dependent now on Jerome Powell and related to the DXY. You know, Euro USD and DXY are inversely correlated. That means when DXY is pushing upward, typically Euro goes down. So now, after this push to the upside, we've taken out this high. We can see a bit of retracement, maybe back to the level of 106.5, and then maybe we target these levels over here. We target these levels over here around 1.083. This is very important to keep an eye on. I don't recommend jumping into the market right now. You need, as a trader, you need to have a good entry point, a good price to enter the markets. We should wait maybe for a retracement. This is the Fibonacci here. So any retracement along the 0.5 level would be a good price to enter, because we have this Fibonacci, and plus we have this resistance that turned for support. Right over here. Okay, so this area, after we push to the upside, is a good area to look for entries. Of course, we can go down in the time frame a bit, see what is happening exactly. As you can see on the 4-hour, we have a double bot here, excuse me, equal lows. We've taken out this low a bit, we pushed through the wick, and then we pushed to the upside. So the area that we've drawn at the daily level coincides with the neckline here of this double bot. So we take the Fibonacci again just to check if the area is in the discounted area here. So yes, it coincides with the 0.5 level. So this is an area to keep an eye on. Of course, once we enter over here, once we retest and we break away again, the only logical level to take your first target would be at the psychological level at 108. And then we can push if we see the market gain momentum at this moment, and Jerome Powell decides to pause again the interest rates in the upcoming end year. So the dollar will typically go down if interest rates is paused. We can see a push up to the 108.5 levels, 108.4 levels. This is related to the euro. Let's see a bit the GBP USD. Technically, it's going to be the same. It's going to be the same scenario. This is the 4-hour. Okay, we'll go to the daily before. As you can see, the bearish trend line got broken with a big wick, with a big bullish candle right here. We've taken out these highs, market structure shifting. We've been making lower lows, lower highs for I say from July. It's about 7-8 months now, and we've broken out on Friday with a big candle up, taking out these highs. So this is an indication from the market that we are preparing ourselves to move upward. Of course, there is some resistance level at these highs, as you can see here. As you can see, the market respected these highs, formed a resistance at these level. Level are 1.24 to 1.23.5. It got respected many times. Then we've broken out here, as you can see here. We've broken out right here, retested several times, then pushed up, targeting these highs right there. So after disrespecting these areas, we can assume that this support has turned again resistance. So even though we've broken out, market structure has shifted in these levels, and if this candle on the daily closes like this, or we go down a bit, it is very required that we stay patient. We wait for a better price to enter, and that is these levels over here. These levels over here at 1.22, and it's a psychological level as well. So to examine these markets, we need to go down a bit in the time frame to determine a good entry point. Looking at the daily gives an indicative sign on what the market wants to do. To pick an entry, we should go down in the time frame. So this is what we are going to do. As you can see here, same story. This level has been taken out right here, and this level as well. So we can fairly say that the market on the 4-hour is turning bullish. So as a trader, we need to be patient. I repeat this because it's very important. to get an entry point from this range. We have this range, the push up, the impulsive move, two big candles. So we're gonna take the Fibonacci from this low to this high, determine a good entry point, and the entry point should be in a discounted area of this range. That means it should be below the 0.5 levels. So these levels should be respected over here, and it is under the 0.5. We can target, of course, these highs that been formed after breaking away from this resistance area. Okay, so the targets could be these levels over here. That's first target been taken out. The next target could be over there, and then over here, also depending on the Jerome Powell policy statement and interest rate statement that's coming up on Wednesday. So we should be very cautious when trading these markets. When we have high impact news, patience is key, and we should exercise caution. We're gonna go see the gold. You know, after geopolitical tensions in the region, you know, gold is considered a safe haven, and we can see that from the jump, this incredible push to the upside, around $100 per ounce, 1,000 pips. We moved in a couple of weeks. So we can see a bit of consolidation happening right here and right now after taking out these levels at the 1987 levels. So of course it has been relentless. The move has been very powerful. We should always exercise caution and try to get a better entry price if we are looking for longs. So there are two scenarios, of course. Either we go up or we go down. If the price could not did not consolidate above the resistance, consolidation above a resistance is considered a bullish sign, and consolidating under a support is considered a bearish sign. So we should wait. If these levels got taken out, we can see a possible correction for the gold, reaching maybe levels of 1945, 1945, 1950, and from these levels we can start looking to long again. Maybe we can reach the historical levels of gold at 2070 per ounce. Going to the equity markets right now, and especially to the US 30. Okay, this is the US 30. We can see right here, this high has been respected, and the market did not shift structure yet. That means we are still making lower lows right here. This is a low. This is another low, and lower highs. Lower highs and lower lows, and this high has been respected over here. Of course, this move to the upside was because of the news that we had the week before. It has been signaled that the pause on interest rate will likely continue to the end of the year. This took the market. This had a positive impact to the market as investors look to gain some momentum over here, taking advantage from the rate hike pause. So if we manage to close above this level, we can see price push taking out these equal highs over here. Relative equal highs, of course. These relative equal highs could be target for liquidity for investors and big institutional. Of course, this line over here is the extension of this resistance level. So as you can see, it got respected over here, over there, and today we respected that resistance level. If we manage to push, the next target will be around these levels, taking out these equal highs. Something like that, maybe. And we push to take these equal highs before having another correction. If we couldn't push and we respected these levels, we could see price going down to the golden ratio over here, which is around 3,300, 134. So yes, these are critical level. Of course, if we go to the weekly chart of the Dow Jones, we can see this big green candle. So typically after a green week like this with a big push to the upside, we don't expect the price to keep pushing. We expect traders and investors to take their winnings, causing a consolidation in the market for this upcoming week. Maybe it will consolidate between this level over here between this level and this level at the top. We may see a consolidation here like this, got rejected, we consolidate a bit, then the market will decide we push to the upside taking out these highs, or we push to the downside targeting these lows. Now we go to the oil. Let's check the oil. We've been stuck in this channel for a bit of time. We got rejected here at these resistance level. Over here, but again, oil is a very cyclical asset. It means it gets wrecked when wars happen and we get a big push to the upside. It's affected by geopolitical tensions, by oil reserves, by policies, by politics. So in these uncertain times, we should be careful when trading oil. We have this area right here. Before we pushed to the upside and we took out these level, causing a market structure shift to the upside, a bullish move. We can expect the price to make a 100%, a one-to-one correction, not breaking this level. If this level got broken and we closed below it, we can see oil going down to the 73 first target, and then maybe taking out these relative equal highs and lows over here. These lows is what I'm talking about. So if oil manages to close below these level, we can see it pushing to these level. I think in these market conditions and with the geopolitical tensions in the region and around the world, the logical move would be testing again here, and then maybe pushing up again to these levels. Big hedge funds and big investment firms are all pushing the scenario that oil will reach historical levels due to what's happening. We cannot confirm nor deny. We can only adapt to the market conditions at hand and take advantage of them. So if the oil goes down to these areas, 78, $79 per barrel, we can wait for a push to the upside, taking out a previous high that was made. Let's say this one. Expect oil to go down, push to the upside, go down again, and then push to the upside. This is a sign that we have broken market structure again, and a move upward is on the way. So this was it. Thank you guys for tuning in, and God bless you.